a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
With all the volatility in the stock market lately, you may find yourself looking for something a little less volatile to invest in. So, our ETF Research Director, Nina Mishra, is going to fill us in on some low volatility ETFs that you've uncovered. Volatility looks like it's going to be here for a while longer.
Yes, so there are so many factors to worry about now. Looming midterm elections, peak in earnings, then slowing global growth, trade and tariff tensions. And although we will get the results of midterm elections on Wednesday, hopefully.
Of this week, yeah.
Yes, but still the outcome may lead to more uncertainty ahead because, most experts believe that it will be a split Congress. So in that case, there will be more uncertainty ahead.
So you'll see the outcome of the elections on November the 7th, but still, you won't really know the impact on the volatility of the market until it's all said and done.
Exactly. So investors should brace for more uncertainty and the likelihood of continued volatility, heightened volatility in the coming months. Although I think the outlook for stocks remains positive, the economy is doing so well. So we will see. And talking about these low volatility ETFs, they are designed to perform well when the markets are very volatile. They underperform the broader market usually when the markets are very bullish, and they tend to hold up when the markets they are volatile or they are in a downturn. So that is the aim, and given the prospects for higher volatility ahead, investors could take a look at some of these ETFs.
So I just want to clarify, because it sounds a little confusing on the surface. So these low volatility ETFs have less risk but a little less reward in volatile bull markets, correct? So we're still in a bull market technically, right?
Yes.
So that side of the story for right now anyway is probably going to be, yes, less risk, but maybe a little less reward.
Yeah. There is a rationale for investing in these low volatility ETFs, even though traditional finance theories say that investors demand greater return for taking on higher risk. But academic studies have shown that stocks with lower volatility, they deliver higher risk-adjusted return over the longer term.
Okay.
But we should also remember that these ETFs are fairly new and they have not been tested so far in major market crashes. We haven't seen any market crash since 2008. And also this is one of the market anomaly, right? And these anomalies work only till they get too crowded. If too many investors pour money into these low stocks with low volatility, there's a possibility that they would become more expensive and more volatile. So those are some of the things investors should keep in mind.
Okay. Well, you have a couple of examples here of these low volatility or minimal volatility ETFs. iShares has a minimal volatility product, right?
So these are the two most popular US-focused low volatility ETFs, but they take very different approaches for creating those portfolios with low volatility.
Okay.
So let's take a look at them. The first one, as you mentioned, is by iShares. The ticker is USMV. So this ETF attempts to create a minimum variance portfolio by looking at stocks' own variance and their covariances with other stocks.
Okay.
And by looking at variances and covariances, they attempt to create a portfolio that has lower volatility than the broader market. It's fairly cheap with expense ratio of just 15 basis points, has a nice dividend yield to 1.9%. Now, you can look at this ETF in detail by going to code page on Zacks.com and read the articles. Also, go to the external homepage to iShares webpage for this ETF. Now, if you look at the portfolio, you will see these are the top holdings: Visa, Pfizer, McDonald's, Johnson & Johnson, and technology gets the highest weight, about 20%. Healthcare and consumer staples are the next two sectors.
All right. And then PowerShares has the S&P 500 low volatility ETF.
Yeah, the ticker is SPLV. So this just selects 100 stocks which have exhibited lowest volatility over the past 12 months, 100 stocks from the S&P 500 index. So as I mentioned, they take different approaches for creating low volatility portfolio. This also has a nice dividend yield of 2.1%. This is slightly more expensive, 25 basis points in expense ratio. Now, for further details, you can go to the quote page on Zacks.com and the external homepage for this ETF, the Invesco web page for the ETF. You can look at the portfolio, and the portfolio is very different. USMV had highest allocation to technology and healthcare. This has highest allocations to utility, real estate, financials. Technology is just 10% of the portfolio. So if you are worried about these rate-sensitive sectors like utilities and real estate, how they will perform in a rising rate environment, then probably USMV is a better pick for you. But if you think that technology stocks will continue to be more volatile, and you want to, hide in more defensive sectors like utilities and real estate, then probably this makes more sense for you. And like the sector exposure, you see difference in top holdings to Coca-Cola, Procter & Gamble, Ecolab, Duke Energy. These are among the top holdings.
All right. So you say these ETFs are relatively new, but not so new that you can't compare them, right, to other performing indexes. So you have two comparative performance charts here.
Yes. So on this chart, I have the year-to-date performance of these two ETFs. I have compared that with the S&P 500 index. Now you can see that it is very clear whenever the S&P 500 index, the broader market was surging, these two ETFs kind of lagged. They did not do too well in a surging market, but when the market was, undergoing correction, then these held up pretty well.
Okay.
And then on this slide, I have the 1 month performance, because during the past 1 month, markets,
we've had a lot of volatility.
Yes. Yep. So you can see clearly when S&P 500 index fell about 7%, these declined much less. The Invesco product declined just about 3%, and the iShares product declined about 4% during this environment.
Okay, very interesting. As always, do you own either one?
I do own USMV in the ETF portfolio that I manage for investors.
All right, thank you for the information. Don't forget, you can see more ETF information on our website, Zacks.com, by going to the homepage and using the Funds tab in the top toolbar to get to that section. And also don't forget, Nina has a weekly ETF podcast I'm sure you'll find very interesting as well. That's on the podcast page of Zacks.com. Go down to the bottom of the homepage, click on the word podcast. It'll take you right to that section of our site. With Nina, I'm Terry Ruffalo.